day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Tuesday, the 5th of March, 2019. We're getting on to the 410, 412 area. And as you can see, you finished up with a mixed day in the stock market. The S&P basically unchanged, up 13 in the Dow, down 4 in the Russell. The Russell's been acting the weakest of all the stock indices. I've been mentioning that in my morning subscriber video, in fact. The dollar index up, but the market sort of a rocky road here, and as you can see, the gold market down. If you watch my gold video, you'll see that the market was trading at the end of the day probably closer to 12.89 or so. So I'd expect that and the silver to open higher tonight. We'll see, because silver was up about 5 cents from there. Oh, by the way, on the energy markets, the API numbers, we had a big gain in the crude oil stocks, about 7.5 million barrels. Another draw on gasoline, and that gave gasoline a little bit of a bid. Distillates didn't do too much one way or the other. In looking at the S&P 500, you've backed off now from this. Well, first, remember, we've gone up from 24.85 to a high close on a weekly basis of 28.05, and we're down from that 28.05, 13.5 points. I mean, not much of a correction, but that's what you're dealing with. When you take a look at the action right here, you had an outside day down yesterday. My theory is that an outside day down's high should not be taken out for 2 days. If it is, what happens is the market, I call it a bear trap, and I look for the market to advance in price. It hasn't been taken out yet. The pattern we unfortunately have with that is now one of a lower low and a higher high. So I don't see a trend right here. What I also look for now is the 18-day average has crossed the 200. And you can see when that happened. You were right here, had crossed it, and this was back on Friday. Since then, you went up, made a higher high. That was one of the things you look for when you get a crossover. And now the market is just sitting here basically close to unchanged, right from that. Support, I'd look at these two levels, the 27.68 level, let's call it, and 27.58.5. When I look at the Bollinger Bands, they have contained the rally. You did hit it back here, you haven't hit it over there, and again, you've stepped out of what we define as a trend with the pattern of higher lows, higher highs for an uptrend, which is something we had up until back here, where the market has now lost that. In terms of momentum, I think the market is setting itself up potentially for another test of the 18-day average. And the reason is, I want you to look at these slow stochastics. When both numbers are over 80 for several days in a row, which you certainly have there, got it? And then it loses it, like it did now. Unless the market gains that right back immediately, and that'll be tonight and tomorrow morning, the odds favor the prices coming down to challenge the 18-day average of closes. One of the dilemmas for this theory of mine is that if you look at the lows, and I want you to see this, of yesterday, you see the market did not hit that 27.65 area. 60 actually was 64.50, 27.64.50. So it's still what I'm calling an open target on the market. That does not mean the trend of the market is turning down. It means this phase of that bull leg has run its course. Now, to prove me wrong, take out this high of Monday, and then I'll be looking for the upper Bollinger Band. In the NASDAQ, it is not the same story. You kept the embedded reading. That doesn't mean it can't weaken, because some of the other indices are, but it's acting better. And notice how the market has fought a battle here at the 200-day average for quite a while now, 2 weeks almost. It still has the embedded reading, and the pattern is one where everything's consolidating in the market. You're no longer in that pattern where you were running up while you have still the higher highs, higher lows. It's just by the skin of your teeth there. In the Dow, it's different. You have the pattern of lower highs, lower lows, and you've hit the downside target already. See when you lost this embedded reading? And I think we talked about this just yesterday. You had lost it. You did it all at one time. You had the outside day down, and you hit the 18-day average of closes, and today what you're doing is you're leaning against that as the market's trying to figure out what to do. Even if you get a hard break in the market, you got layers of support down at the 200-day average, the lower Bollinger Band, this black line, and the 100-day moving average. Remember, on Bollinger Bands, the theory is that the market will trade within them 95% of the time, and the way that I teach them is when you hit an 18-day average, from there it's like a pinball machine. By the way, they just opened one in Chicago, one of the old-time pinball machines right outside of the city. I hear you can't get in it. But as you're looking at this, the market coming down, looking at that, it's like a reset. So now everything's live. The Bollinger Bands, the resistance, the support's all there. Sometimes you hit these numbers and you lean against them, and while it's resistance, it's not the first time you're hitting them. In the Russell, you have lost the embedded reading. When that occurs, you had it here on Friday, you lost it yesterday. If you take a look, yesterday's low did not hit the 18-day average. The low is 1563, that number is 1559. Yeah, I'm not looking for a lot here, but I am looking for the 18-day average. And what's pretty clear is the 200-day average here, this gray line, has been acting as the resistance, plus momentum has now dissipated from the upside. It's gone. In the VIX, you're stuck at the sideways action of the 18-day average of closes. I had told you yesterday, and I'll repeat it, I think the pros, they'll sell puts when you hit the first challenge of these, and when you get to the upper band, I think they're writing calls. Now, the narrower the range gets, the harder it is for that type of trade to work, and it's trying to narrow in. What else is this doing? If you go back a year ago, and I'd really have to put this on, I don't want to go all the way back, but you can see right through here, you've come down to the top of that trading range from last year, and that's where this market has gotten some footing. That's the best way to explain it. In the T-bond market, we have a market with a higher high and lower low. That's not a trend to me. You are oversold. The market had 2 days in a row where it was trying to stay under the lower Bollinger Band. It did it there. Yesterday, it popped back at 144.13, couldn't stay under it. Today, just a little follow through. What do we see in the chart? I don't see a thing. I see a higher high, lower low, oversold, downside momentum because you're under the 18-day average, so the bias is down. The momentum here is flat, maybe correcting an oversold condition. The bias down because you're under the 18-day average, and just like in the other market, a higher high, lower low. Another way to look at this might be in both of this and the bonds, that these markets were going very much sideways, and suddenly they're pushing out the lower part of the market. When you push out the lower part of the markets, what you're doing, because it's an inversion market, you're increasing real interest rates, and that seems to be what's going on in the bonds and the 10-year note. You did the same thing in TLT, and as I've mentioned, I think this market is getting a correction because it's oversold. It's hit support, doesn't seem to want to reach for the 100-day average, but the trend is down. Do I think that pros will step in and sell this with the trend down? I don't think so because of the oversold condition. In the dollar index, you're without a trend. You went down, you hit the 100-day average, the Bollinger Band, and you came straight up from there from 95.71 now to 96.95. It doesn't sound like a lot. That's a big move. It's about a $1,200 move in, what, 4 days. So that was a big shift of sentiment in the market, and now I don't see the market trending. I see the market in a resistance area that it had before, and if I step back here so you can see it, that resistance carries into this range too. Doesn't mean it can't go up, but what it means is you're in that resistance, not trending. Resistance, if it wants to keep going up, is the upper Bollinger Band plus these other numbers. Support back at the 18-day average of closes. In the Eurocurrency, the market is now down to the point where we're getting very close to the lower Bollinger Band, and we are not, I want to repeat this, we are not yet oversold. So this market's got a pattern of a lower low, a higher high. I don't call that a trend. I'm going to look for support against that number right in this area for whatever reason. Resistance back at the 18-day average of closes, but I don't see a trend there. In the British pound, we are correcting an overbought condition. You might end up reaching down for the 18-day average of closes. If you were to take out 129.83, probably the 100-day comes into play. But first you got to get down through that, and the first support's waiting for you here. Due to the fact that this market's still heavily overbought, I'm not convinced you're going to get buyers at that number showing up as aggressively as you would think. Japan's got a problem in the sense that they're getting ready to negotiate with President Trump, and he wants currency valuations to be part of a trade deal. He's already negotiated that with Canada and Mexico, and one of the weapons that the Bank of Japan probably wants to keep is just that. They've been trying to create inflation in that economy, it seems, forever, and they haven't been able to do it. And what this does is, as the market falls, it helps them on their number one, when they bring in foreign reserves, foreign currencies from trade abroad from their big companies and so on, it helps. You're still locked into a downtrend with an embedded reading. This is still a bearish market. And notice the 18-day average of closes is probably going to get under that 100-day when you reopen tonight at 5 p.m. In Bitcoin, the market's doing pretty much what I was hoping it would, in the sense as a market technician. Throw off the name Bitcoin, we don't care. If you're looking for a trend to develop, you're starting to get it. Higher lows, higher highs against the 18-day average. This all falls apart if on Wednesday or Thursday you take out today's lows in the market. So I'd be watching that not to occur. And if the market wants to poke higher, the upper Bollinger Band is the logical resistance. In crude oil, I'm watching here the May Brent versus the May WTI. You've had a nice correction from these highs, and suddenly we're no longer making, if you will, the lower highs, lower lows on just a closing basis. It might mean you want to come back up to that 899 level to challenge it. In the energy prices right through here, you can see that you had lost the embedded reading right there. And when you did, prices went into and lost their momentum. Keep in the back of your mind that very often stochastics lead price. Very important to remember that. And this market's not trending. You got a higher high, lower low pattern, but it's being supported by the combination of the 100-day average and the 18. And as I said, the API numbers for U.S. energies were not all that. I guess you got to say they're sort of mixed, and we'll see what EIA comes out with in the morning. There was certainly not a big reaction to them when they came out at 3:30. In looking at the April crude daily chart, you've got the higher lows, but now you're starting, and I'm wondering, are you starting to run out of upside steam here? You are overbought. The market's trying to correct. It's finding support at the 100-day and probes into the 18. So it still has an upside bias, and as I said, these markets, if world economies were to pick up, it would be something else. In the gasoline market, the one thing I always look at this time of the year are what are the seasonals, and be careful because these seasonals are strong. Gasoline often goes up, as we all know, in spring and summer driving, so you watch for that. And I know outside it's freezing still in Chicago. It's hard to talk spring, but if you go to Texas, other parts of the country, it's very different. You can see how we're just riding this 100-day average. We're going sideways in the market as it's trying to get its footing or work out what it's going to do here. I say work out. When you look at these numbers today, both numbers were over 80 in the slow stochastic. They were not yesterday. They weren't the day before. You're just overbought. You have not begun anything. You got to get into the third day to embed, so you're just overbought. Natural gas still getting a nice bid. This cold weather certainly helping everything, and we'll see how the draws come in this week, but this market's still riding upward. And notice you're getting a crossover where the 18-day over the 100-day, that's a supportive factor. And what about the embedded readings? Look at how the market's got both numbers over 80 today, both over 80 the day before and the day before, Friday. Therefore, you're embedded. Until the red line closes under 80, I'd look for the market on pullbacks for the pros to still be supportive to the marketplace. You know, as I talk all this to you, we also have our Guide to Technical Indicators, volumes 1 and 2 that you'll find here. And it deals in a lot of things that you should get refreshed on, be it the chart patterns. And if you get our futures trading kit, this is part of it too, by the way, and it's all free. And it talks about the different oscillators. It's not only slow stochastics. You've got the MACD, the RSI, and go on and on. There's many of them. Elliott, Gann lines, and how you work with them. Price and time relationship, cycles, very important to the market. Options primer, money management. We've put it all together as part of our kit, or you can get this separately. We send it by email anyways. How do you get it? Call call us. You can go to our website. When you're there, look at all of our offerings. I think you'll find them interesting. And you can click up here at any time to get them as well. It'll take you right to that page. I'm Ira Epstein. Have a great day. See you tomorrow.